Hi everyone, and welcome to the first Market Talk episode of this year. We are January 5th, and the year starts fast with the US swooping into Venezuela and taking Maduro out over the weekend. Interestingly, markets barely react this morning. Oil prices jumped briefly at the open before giving most gains back. Safe havens enjoy a lift, but that's also in the continuation of last year's precious metals mania, while the US 10-year bonds hold steady and risk assets barely flinch. Bitcoin, on the other hand, is in the spotlight in this Venezuelan story, and we will talk in detail about why. But before we do, and as always, I'm İpek Özkardeşkaya, and keep in mind that everything that I will say in this video are based on my own opinions and analysis, and this is not financial advice. Phew. The year starts fast, giving us a rapid heads up that we might be heading into another geopolitically tense year. The US entered Venezuela and took Maduro out on Saturday, as you guys all probably know. I won't discuss about the political implications of that move, obviously, as this is not the purpose of these talks, but we'll rather focus on the market impact. So from market's perspective, what happened last Saturday in Venezuela means higher volatility in oil prices normally, risk premium creeping back into asset prices, and markets being forced to react to political shockwaves as soon as many investors just come back to their desks this January 5th. But this is not necessarily what we see. We see that the markets are quite relaxed faced with the news. In oil, for example, Brent crude jumped opened the week above the $61 per barrel level, while the US crude tested the $58 per barrel offers before gains were rapidly given back. Venezuela is sure known to have the largest oil reserves of the world compared to any other country on the face of this earth. They actually have more than 300 billion barrels of reserves, which is even more than Saudi Arabia. Yes, Saudi Arabia has around 267 billion barrel reserves according to a chart published on Al Jazeera, which is less than Venezuela. But the Venezuelan oil exports are way below the major exporters like Saudi Arabia, the United States, and even Russia. And when I say way below, I mean it. In 2023, Saudi Arabia exported 181 billion US dollar worth of crude. Russia and the US exported around 122 to 125 billion US dollars worth, respectively, while Venezuela exported for 4.5 billion US dollar worth of crude only. 4.5 billion US dollars compared to Saudi's 181 billion US dollar worth of exports, and that's due to their aging refinery infrastructure following years of underinvestment, technical challenges, and of course sanctions. As a result, Venezuela pumps around 800,000 barrels per day today, a third of what it used to a decade ago, which is less than 1% of global oil supplies. So in terms of supply risk, that's almost nil, also considering that the crude market is amply supplied today. The IEA projects that the world will hit a record oil surplus this year, while Trafigura goes a step further, saying that there could be a super glut in oil markets. This explains why a potential supply shock in Venezuela will not be enough to reverse the bearish trend that we see in oil prices, even less so as the US has not touched any oil facilities in Venezuela during last weekend's operations, and the sanctions to Venezuelan oil remain in place anyway. But if you look forward and think about what could happen a few months down the road in the market, well, if all goes well and the sanctions are lifted and the country goes back to pumping their oil, well, the production in Venezuela could rise, but just about 150,000 barrels per day, according to consultants at a firm called Kepler, as it would take years and massive investment to bring Venezuela's oil production back to where it was a decade ago, say about 2 million barrels per day. Trump says that they will rebuild Venezuela, and I'm sure they will with the oil reserves that they have in that country, and they actually could do something quite good because, look, Iraq was producing around 2.5 million barrels per day just before the US-led invasion in early 2003. After the invasion, production and exports initially slumped, obviously due to conflict and infrastructure damage, but then steadily rose. By 2010s, export levels from Iraq had climbed back to around 2 to 2.5 million barrels per day. And last year, Iraq was exporting much more than that. They were exporting around 3.3 to 3.6 million barrels of crude oil on average per day, with at times even higher figures depending on OPEC quotas and pipeline flows. So what I'm trying to say is that the long-term impact of US strategy suggests higher supply in oil markets and lower energy prices as a result of it, just as Donald Trump would like to. And this is certainly why we see oil bears jumping in rapidly to chalk off the rally after the first and initial jump in oil prices this Monday. Elsewhere, and unsurprisingly, the safe haven assets led by gold are enjoying a positive ride this Monday morning. The yellow metal that actually traded at a fresh record high above the $4,500 per ounce level by end of December, but closed last year with a sharp decline, sharp pullback below the $4,400 per ounce mark, is back above that $4,400 per ounce level this Monday morning. Silver is up by more than 3.60% at the time I'm talking here, but the Swiss franc, for example, is softer against a broadly bid US dollar, and there is no particular signs whatsoever of stress in the markets and any lack of appetite across risk assets that we see this morning. A quick word on the US 10-year bond still. We weren't sure actually on whether the Venezuelan news over the weekend would have a positive impact on these papers, the US 10-year papers, on haven demand, or a negative impact rather on bets that higher US military spending would revive the spending and fiscal worries for the US. But judging by the first market reaction, the US 10-year papers are doing just fine this Monday morning, and that's probably because investors don't really feel stressed about the whole Venezuelan story. Now, one interesting place to watch in this Venezuelan story is Bitcoin. The coin has been rising actually since the news of US intervention in Venezuela broke this weekend, because according to some estimations, some reports, Venezuela is sitting on a huge shadow reserve that's thought to be above 600,000 bitcoins. How did they accumulate so much Bitcoin? Well, several reports and intelligence forecast write-ups claim that Venezuela may have converted their gold from the Orinoco mining arc into Bitcoin when prices were low, around $5,000 per coin, it's said, as part of a strategy to amass cryptocurrencies and evade sanctions. These stories describe exporting gold and swapping proceeds into Bitcoin to build a shadow reserve for the country. Then other reports suggest that they accepted USDT in exchange of their oil sales and converted their stable coins into Bitcoin to avoid potential asset freezes as well. So consequently, they are thought to be sitting on 600,000 Bitcoins worth more than 55 billion US dollars at today's prices that could disappear from the market as one, the US doesn't have the keys to these Bitcoins just yet, and two, and more importantly, the DOJ could seize these assets due to narco-terrorism charges and eventually keep these coins in the US strategic reserves and never sell them, in which case Bitcoin could face a decent supply shock and see its value rise again. Anyway, phew, what a first Monday for a year. Today, all eyes will be on Nvidia and AMD CEOs who will be speaking at the much expected CES conference. And later this week, we will be closely watching the US jobs reports to re-dive into the Federal Reserve expectations and their potential implications on markets and asset prices. For now, last week was bullish for technology stocks, even though the S&P 500 and Nasdaq 100 indices kicked off the new year on quite a weak note. So let's see if Nvidia CEO Jensen Huang could do something about that. So this is all for this first Monday of the new year. I'm İpek Özkardeşkaya and thank you for joining me this Monday. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as you do usually. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.
Trading and investing carry risks, including capital loss. CFDs in digital assets are volatile and not suitable for everyone. Swissquote assumes no responsibility for accuracy or losses from its use. Products and services are offered only where legally permitted.